This is a great opportunity for us to bring the investors, policymakers to come together to look at what type of future we want to shape and to really examine the purpose of the capital in a changing world. And if we still want to build a prosperous and sustainable future for generations to come.
Hello, this is the Weekly Tradecast, a podcast brought to you by UN Trade and Development. I'm Sarah Toms. We're exploring how major events are shaping trade and development and how that affects billions of people around the world. This week, we're looking at why and how we must step up investment for a more inclusive and sustainable future. As the pandemic passes, the world is still facing major challenges from climate change, geopolitical tensions, and the pressure of food and energy insecurity. Many developing countries are struggling to recover and grow as financing remains costly, debt is high, and investment patterns shift. With so many challenges and demands, how can we get investment flowing to really drive development now and in the future? Well, joining me now to explain all this is Nan Li Collins, the new director of the Division on Investment and Enterprise. Nan has 20 years of experience in the private and public sectors in Asia, Africa, and North America. And before joining UN Trade and Development, she was at the UN Development Programme. Well, welcome to the show, Nan. It's so great to get you on finally. Now, looking at the investment landscape actually coming from and where it's flowing to, what impact is this having on trade and development?
Thank you, Sarah. In terms of investment flow, if we look at the source of flow and also the destination of the flow, we'll still see the leading countries as, for example, US and China are still the largest FDI outflow countries. And then in terms of receiving the flow, it still remains that. But we have seen many changes in the kind of the regional disparities. For example, over the last few years, we've seen really ASEAN regions emerging as a regional bloc that has been attracting a lot of investment flow and has been growing at a very high rate. Of course, this also was due to the changing investment pattern, the kind of supply chain restructuring. So we've seen that these global trends has been evolving, and then developing countries as a whole has been actually in a more difficult situation.
So, Nan, in an ideal world then, how should investment be driving inclusive and sustainable development so developing countries can really see the benefits? How can we get closer to that ideal realistically?
Yes, in the ideal world, we would like to see capital be aligned with the sustainable development goals. We would like to see those investments driving inclusive development, green transitions, technology development that is benefiting everyone, and we would like to see more capital flow to where it's most needed, the most marginalized groups. We've seen the movement of environment, social, and governance, right, being first issued by UN Global Compact 20 years ago, right? We call it ESG in short, and it's been really adopted by many asset owners, by many financial markets. We've seen progress that also in regulatory environment where many countries have also developed rules and regulations to also incentivize more investors to align with these ESG standards. However, there's a lot of problems in reality because first, we still lack a harmonized regulation standards. So this is actually the work we're doing from UNCTAD is helping. We have the intergovernmental working group on accounting and sustainability. So this is where experts and policymakers from all over the world come together to discuss and debate how they can harmonize those standards and how do these standards apply in their national context. Right. So particularly in developing countries where they have to really balance the economic growth and also the sustainability imperative.
But Nan, you mentioned about giving investors incentives. And that's a $60 billion question, isn't it? Are investors learning the right lessons? Are they focused on the right things? And what are the incentives for them to fund a more inclusive future?
That's a difficult question. In our work, in our monitor, we have actually a sustainable finance observatory platform where we publish reports for the 100 largest pension funds, institutional investors to monitor their performance against these sustainability objectives. And we realized actually the results is not very promising because we are seeing that only half of them issue sustainability report, and only 20% of them have active portfolio investing in green and renewable energy, for example, for climate-aligned investment. So there is a lot of challenge for this type of investor to align investors' risk appetite with the real return, right? So from investors' perspective, they always look at risk and return. So I think going back to the interventions we need to have, one is for regulatory bodies to issue clear rules, regulation, guidance in terms of compliance and mandatory requirements in their sustainability performance. And the other one is really awareness building, capacity building. So those investors understand, the impact that their investment is making to the world, to the economy, to the people. So these are very important. So we need to change from both sides.
You also mentioned, Nan, about the balancing act that developing countries do. How can developing countries not only entice investors, but also manage so many other things, their debt burdens, spending on infrastructure, building resilience, and also fighting climate change all at the same time?
Our Secretary General, Rebecca Greenspan, has spoken about the reality where we live in a world with high debt, low growth, weak investment, and trade at risk. So globally, there's a lot of collective actions addressing the debt sustainability issues. But from a national government perspective, at one hand, they need to manage the debt sustainability issue. We live in a world where 3.3 billion people pay more cost to service the debt than being able to invest in health and social development. So on the one hand, we're advocating as UN to multinational financial institutions and globally on reforming the international financial architecture to look at effective ways to help countries to manage their debt issues. On the other hand, as a government, while they are managing the debt, they need to also look at ways to attract private investment to grow. For infrastructure investment, for example, they can look at different ways to issue infrastructure bond, look into PPP arrangement, public-private partnerships to bring in more private investment at the also affordable rate, right? So, of course, they need to look at how they can balance those acts so that they can not create additional debt burden in their national development strategy. And on the other hand, they also need to look at economic diversification. And this is another very important area the organization is working on, right? To look into how to build diversification and resilience so that the economy, particularly the SMEs, would have a space for development. So, of course, all this is happening under the climate crisis. So this is, again, adding a lot of burden to the country's planning in terms of how they can also cope with climate crisis. So on one hand, they need to look at viable energy transition pathways, right? Looking at the new opportunities to develop green technology and renewable energy, green infrastructure. But on the other hand, they need to really look at adaptation, right? Which they need more investment from public sector, public finance to really develop resilient infrastructures to deal with the multiple climate crises. This is happening both in developed countries and developing countries, and it's our collective challenge.
This year, UN Trade and Development will be hosting the 9th World Investment Forum. What are the biggest issues around the global financial system and the investment landscape that you'd like to see addressed there?
On one hand, we need to look at all these short-term immediate challenges and look at ways to collaborate to come out with solutions, right? On the other hand, we need to look at also the long-term future. Since we passed this Pact for the Future, this year UNCTAD's own ministerial conference will be focusing on shaping the future. This investment summit would be a great opportunity to talk about investing in the future. What type of future we're looking at and what type of future can we shape and create with the power of capital market and financial world? Of course, if we look at the challenges in the world, and we are seeing very low confidence level from the investors. And investor confidence is a key issue we need to address in this whole geopolitical challenging world. So this is a great opportunity for us to bring the investors, policymakers to come together to look at what type of future we want to shape and to really examine the purpose of the capital in a changing world. And if we still want to build a prosperous and sustainable future for generations to come.
Well, that's something definitely for the calendar, the World Investment Forum in October. Thank you so much. That was UNCTAD's new director, Nan Li Collins, who was this week's guest. Tune into the weekly Tradecast for more insights on the most pressing issues around the world of trade and development. And there's even more on our website, unctad.org. I'm Sarah Toms in Geneva. Goodbye for now.